ya se va desde la Bolsa de Madrid, esas caídas que están marcando la jornada. Está con nosotros Graham McCraw, Equities Investment Specialist in Small Caps in Abrdn. Thank you very much to have with us in this time.
Thank you. Good
and
to see you.
And in person.
Yes, nice to see you.
This is a good moment to talk about small and mid caps because a big part of the investors are talking about this is the best moment. Is it?
To invest in small and mid caps? I mean, for us, when we look at small and mid cap investing, we think it should be a long-term allocation. If you look at the historical data of small and mid caps compared to large caps, the data shows that over extended periods, small and mid caps typically outperform. But investors are always looking for a good entry point. And for us, there's a few signals out there that suggest that now could be a really interesting time to look at that. One of those is relative valuations. So if you look at the relative PE of small and mid cap compared to large caps, they're trading at multi-year lows. So in the US, for example, you have to go back to the 1980s to see a time where US small caps were trading at such a discount compared to large caps. So we think that's one really attractive factor. Another reason is there's a lot of change going on in the world, change with consumer behaviour, change across sectors, across industries. And we think that plays into the hands of more nimble, smaller companies. These companies have far more simple business models. They typically do one or two things. And we think it's much easier for these companies to adapt to these new opportunities than perhaps a mega cap company that's a far more complex business. So we do think there's some really attractive reasons for why investors now should perhaps think about looking at smaller companies.
And inflation? Is easy for this small and medium cap to transfer these prices to the customer?
Yes, there's some really interesting data out of the US by Jefferies that looks at data going back to the 1970s. And it looks at small, mid and large cap in various levels of inflationary environments. And what that shows is that small caps actually outperform large caps over those periods. And that's going back to the 1970s in the US. In terms of passing on cost increases to customers, I think you've really got to differentiate between high quality smaller companies and lower quality smaller companies. High quality smaller companies, in our opinion, are much better placed to pass on these price increases. They typically dominate their market. They might have a 60 or 70% market share, and they're much better placed to pass on these price increases to their customers. Whereas low quality companies, we would describe them more as price takers, and they're really going to struggle in an inflationary environment. We think their margins will become under a significant pressure. So I think within small cap, you've really got to look at the higher quality companies as those that will do well in what's clearly quite a challenging environment going forward.
How to select them?
Yeah, so for us, it's all about bottom-up stock selection. Smaller companies' success is really driven by the kind of company management, so it's about carrying out rigorous fundamental research. On our European and global strategies, we're assisted by a quants tool that we call the Matrix. And this is a tool that we developed in-house. And what it does is it screens the investment universe on a range of factors, and it points us towards the most interesting opportunities. And at that point, it's up to the team to go and carry out the fundamental research. I mean, one thing that's been really encouraging in recent months is we can actually go out and meet companies again. Obviously, during the pandemic, that simply wasn't possible. And I think within small cap, that's one of the big advantages. If you've got the time and the resources, you can go out and spend half a day with this company. You probably get to meet the full management team. You might see the majority of that company's operations in this one location. If you compare that to large cap, where you're listening to an earnings call alongside hundreds of other analysts, that information advantage you can gather within small cap is really key. I think that's one of the reasons why active small cap managers tend to do better than active large cap managers, because of that ability to really find something out that the market doesn't yet know.
You are talking about the option about biotechnology, I think, and healthy companies and technology companies during the pandemic moment. Now it's very different time.
Yep.
And what sector you could select in this moment in the picture where it's completely different,
yep.
But we have healthy companies, biotechnology companies, now another time with a good price.
Yeah, you're right. There's obviously been a huge change in markets from what we saw the previous kind of couple of years to this year. So It's very much more value cyclical stocks that have done well. But for us, it's really about thinking over the next 3 to 5 years, what are the best investments for our clients? And in our opinion, it's not these low quality cyclical stocks that have had a bounce because of an increase in commodity prices. So from a sector perspective, again, this is very much built from the bottom up, but we do have a lot of exposure in the industrial sector. So these companies that operate in a niche market in an area of structural growth, where in our opinion, the future of that company is driven by management and not by an external factor. What we have done within the portfolios is reduce exposure to more consumer-facing sectors. I don't know what it's like in Spain, but in the UK, inflation's at kind of 9%, and we are slightly concerned around how that will filter through to kind of discretionary spend within the consumer. So stocks that do have a high discretionary element of their revenues, we've looked to reduce that within portfolios and really kind of tilt the portfolios towards companies with really high recurring revenues, who are really confident on the earnings growth.
We are thinking about small and medium caps. We are thinking in United States,
Yep.
because there are more tradition than
Yeah.
there. But in Europe or in UK,
Yep.
The position, the moment for these companies could be a good moment now.
Yeah, I mean, I think the arguments for why small cap are the same in US, Europe, UK, or global. They're cheap, they're nimble, and there's also some interesting data that shows that they typically outperform when the market recovers. They typically fall more, which is what we've seen so far, but they also recover faster. So the reasons that we've talked about that are applicable for the US, I think, are exactly the same for Europe. I mean, there are some differences. I think it's quite interesting if you look within Europe, there's a higher percentage of founder-owned companies. So within our European strategy, almost 50% of the portfolio has a founder still involved with that company. We see less of that in the US. But for us in Europe, we really see that as a positive. They're the genius that came up with this company. They typically have a significant shareholding, so their interests are aligned with ours. They have a real passion for the business. And time horizons is really important. They're not thinking about the next quarter, they're thinking about the next decade. And that really aligns to our thinking. Now, that does bring with us some governance questions. We can probably all think of some kind of maverick founders of some very famous companies. So we have to make sure that the kind of challenge at a board level is sufficient and the shareholder structure is also appropriate. But I'd say that's one of the differences that we do see within Europe compared to the US, that kind of higher percentage of founder-managed companies.
Thank you very much, Graham McCraw, Equity Investment Specialist in small caps in Abrdn. Thank you very much for having this time with us.
Thank you.
Good day, good business.
Thank you.
9:30 de la mañana, damos un momento de publicidad. Estamos esperando a